Hey everybody, welcome to the guided assignment for the accounting cycle. So this is just a review of the accounting cycle that you would have learned in Uses of Accounting 1. And I'm just going to kind of go through this so you can follow along and do the work. Again, just a review. So let's just take a look at it. It gives us let's see, this is the Gorman Group. They're a financial planning services firm. And this is an end of period spreadsheet. Looks like an adjusted trial balance. And then they want us to prepare an income statement, a statement of stockholders' equity, a balance sheet, and then journalize the closing entries. So we can do that. So this is just a review of all the things we learned, not all of them, but the big things we learned in Accounting 1. So I think what I'm going to do, so I don't have to keep scrolling back and forth, is I'm going to use my snipping tool. Of course, this isn't a required step, but I'm just doing this to make my life a little easier so that I can just take a little picture of this. And then I will, there, now I can have them, I can have a picture of this trial balance right here next to what I'm working on. Okay, so on the income statement, we're going to have our revenues and our expenses. So to find them on here, I know that the trial balance is always in this order: assets, followed by liabilities, followed by equities. They have common stock, retained earnings, dividends, then revenues, then expenses. So looks like this company has two different revenues. One is service fees and the other is rent revenue. And the service fees balance is 468,000. And the rent revenue is 5,000. So that gives us 473,000. And then our expenses are all right here. You can see their biggest expense is the salaries expense. And they also have depreciation expense on the equipment and rent expense, supplies expense, utilities expense, depreciation expense on their buildings, repairs expense, insurance expense, and miscellaneous expense. Again, I'm just pulling these numbers right off of the trial balance. I'm not making anything up or doing any other math. Just what's given to us right there. We'll add up all these expenses together and we'll get $360,000. Sorry, I had to pause the video there for just a second. And then our net income will be our total revenues minus our total expense, which will be 113,000. Check our work. It's easy to make a mistake, but there's so many, so that's why we have checks. Make sure we're good, and we are so far. So now we'll go to the statement of stockholders' equity, which in essence will start with our balances at the beginning of the period. We'll add any net income, subtract any dividends, and that will give us our balances at the end of the period. So again, our common stock account, if we look over here on the trial balance, had a balance of 25,000. And our retained earnings account had a balance of 195,000. Those add up to 220,000. Net income for the year, it doesn't affect common stock, so I'll just put actually, I think we can just leave it blank. But here's our net income of 113,000 does increase retained earnings. And then our dividends for the year, again, we can look on the trial balance of 20,000. That reduces retained earnings. So now we can say 25,000 in stock. 195 plus 113 minus 20 is 288,000 in retained earnings. And then 220 plus 113 minus 20 gives us 313,000. Also, we could add up 25 plus 288. That also gives us 313. So again, we'll check our work, make sure we got everything right, and we did. Okay, on to the balance sheet. Remember, the balance sheet is listed as assets and then liabilities and stockholders' equity on the other side. So we'll start with the asset side and the current assets. And again, that's the order they're listed in on here. So our current assets are cash, accounts receivable, supplies, and prepaid insurance. Remember, current assets are those assets which are cash or which we think will be either converted into cash or used up within the next year. Again, just taking the numbers right off of the trial balance. And then we'll add them up. And those add up to 11, 28, 150, 6350, and 9,500, 55,000. That's our total current assets. Then we're going to have our property, plant, and equipment, which will include our land, our buildings, less any accumulated depreciation on the buildings, and our equipment. Oh, so this is going to have us do the book value of the buildings. Book value is just the cost of the buildings minus the accumulated depreciation. And then we'll have equipment. Oops. Equipment minus any accumulated depreciation on the equipment will give us the book value of the equipment. So the land has a balance of 75,000. Buildings had a cost of 250,000. Less, so we're going to say minus the accumulated depreciation on the building. So 250,000 minus 117,200 will give us 132,800 as the book value for the buildings. The equipment had a cost of 240,000. The accumulated depreciation on the equipment $151,700, so minus, which gives us a book value of 88,300. So these three, the land plus the book value on the buildings, plus the book value of the equipment, gives us our total property, plant, and equipment. It should be 296,100. And then our total assets, which will be our total property, plant, and equipment, plus our total current assets, should be 351,100. Our current liabilities, so we'll get through all the assets here. We'll see we have accounts payable, salaries payable, and unearned rent. Where am I at here? Let's see. We are 3,300 for salaries payable and 1,500 for unearned rent. Total is 38,100. That's our current liabilities. Doesn't look like we have any long-term liabilities, so we'll go right into stockholders' equity, which will be our common stock and our retained earnings. Common stock we could take right off of the trial balance, 25,000. But our retained earnings, we calculated the new retained earnings up here of 288,000. So that's the number we'll use. So our total stockholders' equity will be the 288,000 plus 25,000, which is 313,000. And then our total of liabilities and stockholders' equity will be 313,000 plus 38,100, which is 351,100, which should match our total assets, which it does. That's good work, or good, a good. I guess that's good. It means that we're likely right. We'll double check. Just hit check my work. All green check marks all the way through. Again, it's easy to make mistakes. That's why we let you have checks, so you can double check before you move on. All right. Sorry, guys, I'm battling a little bit of a cold here. So we're going to journalize the entries that were required to close the accounts. Okay. So remember, when we close accounts, what we're doing is we are taking all of our temporary accounts, which are our revenues, our expenses, and our dividends, and we are closing them out to a permanent account, ultimately to what's called retained earnings. So that's the process. So all we're going to do is we'll start with our revenues. Remember, our revenues were service fees and rent revenue. And since those accounts had credit balances, we want to bring them to a zero balance. So we're going to debit the account its full amount. So 468,000 and 5,000. Once we do that, once we debit service fees 468,000, then the balance of service fees will now be zero. The same with the rent revenue. And then all the expense accounts, they have debit balances, so we're going to credit those accounts. So salaries expense, sorry, again, I had to pause it for just a second. And again, we're just going through the expenses that have debit balances and we're crediting. So depreciation expense on the equipment. Again, the reason we're doing this is to bring the balance to zero. Okay, I might have missed one. What did I miss? Let's see. Salaries, depreciation, rent, supplies, utilities, depreciation, the buildings, repairs, insurance. I guess I didn't miss one. Good. And then we have miscellaneous expense. All right. So there's all my expenses. I mean, all my revenues have been debited and all my expenses have been credited. And then there'll be some difference in the balance between these two. In essence, I can add up this side and add up this side, and I'll come out with some difference. And that difference will be the same as our net income because it's our revenue minus our expenses. And so since our revenue is what is that, 473,000, and our expenses are going to come out to 360,000. The difference between them is 113,000. And we're going to close that all out to retained earnings. Remember, whenever we do a journal entry, both sides have to balance. So if our debit side was bigger than our credit side, then we would have to put this entry, this final entry, here to make them balance. So there we'll close all of our revenue and our expenses directly out to retained earnings. And then we're going to close our dividends to retained earnings. Remember, dividends had a debit balance of 20,000. So we're going to credit the dividends, 20,000. And we will debit our retained earnings. Now remember, up here, we kind of already went through this process where we said, okay, so here's our retained earnings. It had 195,000 at the beginning. We added 113,000 for our net income. Remember, with retained earnings, a credit adds to it. And we deducted 20,000 for our dividends. So this is just showing the journal entry that actually does that. Finally, it asks us if the balance of the retained earnings had instead increased $115,000 after the closing entries were posted and the dividends remain the same, what would it have been about the amount of net income? So we show here that we increased, let's see, with 113,000 net income and 20,000 in dividends. That means that we increased by 93,000. So if our dividends stay the same, then how much net income would we have had to have in order to increase by 115,000? So remember, our retained earnings always goes up by net income and down by dividends. So if our retained earnings was going to go up by 115,000 and we had 20,000 in dividends, then we must have had a net income of 20,000 more than 115,000, or 135,000. Check our work, and we're good. So I hope that was a good review of things that you'd already learned last semester or whenever you took Uses of Accounting 1. And I hope you have a great day.